that's it. And if I brand
all right. So today we'll be talking about the new tax bill that came out. Talking about tax reform. It's a pretty big topic that went on, and so just wanted to give you guys an update and make sure I share my opinion on the topic itself. So thank you all for tuning in to WGHC 98.3 FM, your voice, your music, your station. My name is Jeff Badu, and I'm a licensed certified public accountant in the state of Illinois. I'm the owner and practitioner of my firm, Badu Tax Services, and we specialize in tax preparation, tax planning, and tax representation for individuals and businesses. And so today's topic is centered around tax reform and all the different updates that went on. But first, let's kick it off with a market report. So this report is as of November 3rd, 2017. So the benchmark indexes were ultimately pretty mixed last week, as large caps and tech stocks performed well, while small caps took quite a hit. The S&P 500 closed the week posting gains for the 8th straight week. So the market has been doing pretty well overall for the past 8 weeks, as well as throughout the year in general. The small caps of the Russell 2000 lost about 1%. Technology and energy stocks performed pretty well. And economic and political news also may have shaped the market last week, as the Federal Reserve decided to hold short-term interest rates steady, and the president nominated a new chairman of the central bank, also known as the Fed, to succeed Janet Yellen. Long-term bond yields fell as investors pushed bond prices higher. Ultimately, also the price of crude oil went up from $54.02 to $55.73 per barrel. The price of gold went down from $1273.90 to $1270. And overall, the market has been doing really well so far this year. The Dow Jones is up 19%. NASDAQ is up 26%. S&P 500 is up 16%. Russell 2000 is up 10%. Global Dow is up 18%. So this is definitely been one of the best years of the stock market. I've personally never seen a market perform so well consistently. So today is on a topic of tax reform. This is something really big. It's huge. It's something we definitely need to focus on and pay attention to. So ultimately, there will be changes coming up as it relates to taxes. Remember that taxes tend to be an individual's biggest expense. So this warrants a lot of attention. We must pay attention to this stuff because it's very important. It affects us now. It affects us later. It affects us every time. So taxes can definitely eat away somebody's retirement. It can eat away somebody's budget. So it's very critical that we pay attention to these updates. And this will impact virtually everyone. So we must stay aware ultimately. So to go over a few updates, and there was actually a new bill that came out, or at least the Senate side came out with a new bill. So I'm going to focus more on the House. The one that the House came out with. And the Senate one is pretty similar. But there are a few differences. But let's focus more on the House for now, at least until the actual bill gets passed. So with the changes, there are currently 7 tax brackets, and they would like to change that to 4, with 12% being the lowest rate. So what this will do ultimately is that it will overall lead to people paying less in taxes. Since the threshold, pretty much the way the brackets work, it's on a marginal scale. So the different thresholds are a little more favorable, especially for people who earn less money compared to those in the higher tax brackets. So ultimately, if this bill does get passed, you might be paying less in taxes because most people I see pay about 15%, but now it will drop down to 12%. So that's a nice plus. That's a nice boost to the bill, something that's on the positive side of the bill. And then moving on, the standard deduction will be doubled. This is a huge benefit. You know, the standard deduction right now is around $6,400. So ultimately, they will double that. And that is a huge, huge benefit. And so what this would do is it would lead people to paying less in taxes, just like the whole tax bracket change. People paying less in taxes, as most people use the standard deduction as compared to the itemized deduction. And so once the standard deduction gets doubled, this will ultimately lower a person's taxable income. And then moving down to the list, something that's not so on the positive side, but personal exemptions would be repealed. And with this, basically everyone gets a freebie. I call it of about $4,000 or so per year. So this would ultimately get repealed, and so this would basically offset some of the benefits of the standard deduction. So if the standard deduction is doubled and you're taking away the personal exemption, you're only left with about a $2,000 or so difference, or $2,500 difference that would benefit. So it's not really, I mean, with this offset, it's not really a good thing. So even though they're doubling the standard deduction, the personal exemption getting taken away it's a downfall. So you're basically trading in $6,300 or $6,400 or so for $4,000. It's a nice rate of return, but it still doesn't really make that big of a difference. And then moving down the list, this is more on the business side, but pass-through entities. So let's see, sole proprietorships, LLCs, tax as sole proprietorships, or single-member LLCs, partnerships, S corporations. All these entities would now be taxed at a maximum 25% tax rate, as compared to what they're paying now at the ordinary income tax rates, which are usually higher. So ultimately, these companies, or when you have a company, a pass-through entity, the maximum taxes that you would pay on your distributable income or your net compensation would be, or your net earnings at least, would be 25%. So that's a nice boost. The main purpose of this act, or this tax reform, is to encourage business owners, and that's the general theme of this whole presentation, or this whole tax bill. So this will lower taxes for small business owners, which is a huge plus. So for people like myself, we love things like this when we pay less in taxes. And so this is one of the primary goals of the bill, is to help reduce the tax burden on business owners, so that we can create more jobs and push more jobs into the economy. And then also you have, moving down the list, certain itemized deductions. Now this is a huge negative, but certain itemized deductions would be repealed and eliminated, such as the medical expense deduction. So if you have medical expenses that exceed 10% of your adjusted gross income, which most people won't get, you ultimately get to write that off. And this would be eliminated. Alimony deduction. So if you're divorced and you're paying spousal payments to your ex-spouse, today you can deduct it, but in the future you might not be able to. And then state and local income taxes. So anytime you pay money to the state, or anytime you pay money to a county, you actually get to write it off. Now that will be eliminated. At least if you itemize, you can write it off. And then this is so huge, unreimbursed employee expenses. So when you're an employee of a company, let's say you're a key employee, and you're traveling all the time, you're expensing a lot of meals, you're doing a lot of, maybe you bought a computer for work, different things like that. You used to be able, well, I guess now you can write it off. As we speak today, you can write it off. But in the future, you might not be able to, because unreimbursed employee expenses would no longer be a tax write-off. So that's huge. This is one of the biggest downsides to this bill. This is something I believe that they should change, because this only disincentivize people to do certain things. And so this would also cause people who itemize to miss out on some very crucial tax benefits, such as the medical expense deduction, especially employees. So remember, with this bill, the main goal is to encourage people to go out and create jobs. It is not meant for those who work. It is meant for those who create. So, and that's the same case of today. Those who work pretty much they pay the most in taxes. And those who create jobs, those business owners, they're the ones receiving all the tax breaks. Now, they say there's about 14 tax benefits or tax advantages to the code for employees, W-2 employees. And there's over 200 for small business owners or business owners in general. So the general theme of this is, go out and get a business, start a business, no matter what it is. You don't even have to be. It can just be a something that's 1099 based. Maybe you're a contractor. It doesn't even have to be a full blown. We're not talking about Microsoft's or General Electric or anything. This can be the smallest of businesses, but we must start them regardless, because we'll receive a lot of tax breaks, and of course, it's just generally, it feels good to start a business, just in general. So that's one of the things to keep note. So another thing, this is actually something I noticed today, is that with these itemized deductions being removed, this might encourage people to get divorced, since alimony payments would no longer be taxable. So if you have an ex-spouse that's paying you alimony or spousal payments every month, remember, child support is never tax deductible, but alimony payments currently are tax deductible to the person paying it, but they're taxable to the person receiving it. So under this new bill, the person receiving it would no longer have to pay taxes on it, so they might have more incentive to get divorced, especially if they have a rich husband or something like that, or a very wealthy woman that they're living with, something like that along the pipelines. It might encourage them to, as part of their planning, it might encourage them to get divorced, get the spousal payment, and not have to pay any taxes on it. And then the person paying it, they don't get the tax write-off, which is just not such a good thing. And then ultimately, this will lead those who itemize, even those who do not itemize, that maybe they were close to getting itemized. Well, now you can pretty much just eliminate that, because this would overall lead to people paying more in taxes, which is, I guess, not the purpose of this bill. The purpose of this bill is to reduce taxes, especially for those who create jobs. Moving down the list, the child tax credit would be increased to $1,600, up from $1,000 per child, which is a huge plus. And what this does is it leads people with qualified children to pay less in taxes. And this would also encourage people to have more children, because for every child you have, that's a $1,600 credit. So this might encourage more people to have babies ultimately. So one key thing to note is that anytime they create tax rules, tax laws, and different things like that, there's always incentive behind it. There's always a reason for a tax benefit. Or actually, not every single tax benefit. But for certain tax benefits, there are reasons for it. So for example, the home interest deduction or the mortgage interest deduction. It's incentivizing people to go out and get homes so that they can go out and pay more property taxes. And then you have things like the child tax credit. It's incentivizing people to ultimately produce babies. And the student loan interest deduction, which we'll talk about more, it's incentivizing people to go out and go to school and don't have to worry too much about student loans. So all of these different benefits, all of these different tax write-offs or breaks, they always encourage people, and that's why investors get the most tax breaks, because the government wants you to invest into businesses and different things like that. So just something to keep in mind. Now, this is something that it really struck me right here, is the student loan interest deduction would be repealed. Huge downside, and this is something they should definitely change about the bill. But ultimately now, if you pay up to $2,500 in student loan interest per year, you get to write it off on your tax return as long as you don't exceed a certain threshold. So with this bill, you wouldn't be able to do that, which doesn't really make sense when the student loan burden is so heavy nowadays. It's over $1 trillion in student loan debt in America today. So this only disincentivize people to go out and get an education, because for those that know about the student loan interest deduction, under this new bill, they wouldn't be able to write it off. So this only adds more to the burden, and if anything, it's the rule or the goal of the whole, pretty much the goal of the entire bill, or the goal of these tax breaks and things like that, is to incentivize people. So when you're taking away the student loan interest deduction, you're really telling people that, hey, we don't value going to school, or we don't value funding your education with other sources such as loans and things like that. So I believe this is something that is ultimately not going to pass, because it only disincentivizes people to go to college. And then other things is you have the repeal of the alternative minimum tax and the estate tax, which are huge revenue sources, especially the estate tax. Currently, pretty much an estate tax is a death tax. So when you die, you pretty much have to pay taxes. If your estate is worth over $5.4 million, and if you have a spouse, you basically double that amount, so $10 million or $11 million. So in this case, and it is a huge revenue source. I mean, some of the wealthiest people in the world today, or some that have passed away, they have to pay the estate tax. So for them to repeal this would to reduce, to lose a lot of tax revenue, let's say. And so less taxes will be paid because of this proposal. And the alternative minimum tax, it's the IRS basically getting a second. It's like Mike Tyson when he gets you in a ring. He throws one punch and then he throws another. Well, this is the second punch from the IRS, is pretty much saying that, hey, we understand you use all these breaks and strategies and everything. Well, we'll get a second round with you, or a second punch, and we'll try to tax you even more, which is what the alternative minimum tax. It's taxes on top of taxes that you already pay during a year, and it's based on a different calculation. So overall, it leads to less taxes being paid, less tax revenue for the government. And then this is another big thing. This is probably the biggest thing of the bill, is that corporations would now pay a flat 20% tax. Huge part of the bill, and this is probably why tax reform was created or was thought of in the first place. So what this means is that this will cause corporations to pay less in taxes and ultimately create more jobs for the economy. So us business owners, or corporate owners, or corporation owners, pretty much now you would pay a flat 20% tax rate. The highest tax rate for corporations right now is 35%. So think about a company like Microsoft, General Electric, Apple, Johnson & Johnson, AT&T. The list goes on. They would now jump from 35% all the way down to 20%. That is huge. And so what this does is it encourages these corporations to create more jobs, bring more money into the U.S., and just stabilize the economy even more. So this can be a huge plus for the economy, because more jobs will be created, because these companies will now have more resources to distribute. More bonuses might get paid out, more salaries might get paid, more benefits and different things like that. But ultimately, the corporations will be paying less taxes and creating more jobs for the economy. So that's the underlying theme, remember, of this whole act and this whole proposal, is to create more jobs, and is to encourage those who create jobs to create even more jobs, and those who don't create jobs to start creating jobs. And that's why it's called the Jobs Act. And now, other things are the Section 179. So anytime you buy property, equipment, or anything like that, you get to write off a certain amount. So now it's currently up to $500,000 in qualified property. So now you get to write off up to $5 million, or under the new bill, you would get to write off $5 million in these Section 179 depreciable items, at least. So those are some of the main key points. I mean, there are other components to the bill. that are not, I wouldn't say not as important, but they're just not as big as the ones that I just talked about today. You know, this is definitely important stuff. It's something to keep aware. This thing will probably keep riding along for the next year or so until it gets passed. So this is where tax planning comes in handy. Unfortunately, we can't really plan when we don't. We can plan so much, but when different changes are about to happen, different things like that. So until this bill gets passed, that's when we can actually do some real planning. But we can do some preliminary planning. Now we know that, hey, it might be that time to go out and start that business you always wanted to desire, or you always desired. You know, maybe it's time to get rid of that W-2 and turn it in for a 1099. Different things like that. So with this tax bill, with this proposal, it encourages people to create jobs. It encourages people to become entrepreneurs. It encourages people to own businesses. And it dissuades people from being employees, because even though they dropped the lowest tax rate, or they dropped the tax rates, pretty much you're still, you know, as an employee, you're still going to have a pretty heavy tax burden. So even though the lowest is 12%, you might end up being, a little higher than that. So that's just something to keep in mind, is that, you know, when you work for somebody, pretty much you end up paying the most in taxes. And then when you provide jobs and when you invest money, you pay the least in taxes. So that's what the code really is all about. It encourages people to invest and to create jobs ultimately. So overall, I mean, this bill or this new act, it just encourages people, saying, hey, it might be time to stop working. It might just be time to go out and start that business, so that you can hire your cousin. You can go hire that person. Now they have a job. Now they can create. Now they can just provide more resources to the economy ultimately. And so this is huge. This is definitely pretty big. This is a part of the future. It's definitely something pretty major. And as always, seek the help of a tax professional. Seek the help of a tax advisor when dealing with these topics and different things like that, because we'll help you out. You know, we'll lay out a plan. We'll get the tax returns filed. We'll ultimately give you all the resources that you need in order to have a proper tax strategy. Because as we know now, taxes they're not actually that high compared to what they could be. But still, the average American pays about 40% in taxes. So this is something that's huge, and this is something we definitely need to pay attention to. So remember what this does: encourages more people to go out and own businesses, since it favors business owners, also known as job creators. And then employees will still end up with a huge tax burden, as this is the case with the current tax code in general, is that, remember, those who work for money ultimately pay the most in taxes. And remember, this should give you more reason to go out and start that business that you've always desired. It's definitely a pleasure being a business owner. I mean, it's not everyone is ready for that step, but ultimately it can provide some huge benefits, I would say. I mean, being a business owner can be a huge plus. And so this is a huge benefit. So if anyone has any questions or anything like that, please feel free to reach out to me. 773-679-7198. You can also comment on my Facebook Live right now. You can tweet me. You can Instagram. You can Facebook. I'm pretty much all over social media, so this is something big for me. And remember, tax season is coming up. We're only we're less than 2 months pretty much from tax season. Less than 2 months from the new year. So definitely time to start getting your documents ready, especially if you're a business owner. Time to start compiling those documents, making sure you have QuickBooks or something that helps you keep track of your numbers and things like that. some other tax planning strategies, some other things to get you prepared, making sure you're maxing out or you're strategizing the right way to take advantage of your 401ks and the matches, setting up your HSAs, health savings accounts, getting your IRA set up, doing any rollovers you need to get done. And these are just very important strategies. Starting that new business that you've always desired. If you have some startup expenses and you're in a very high tax bracket this year, you might want to make that business official so that you can utilize those tax write-offs against your gross income. Maybe it's time to go out and buy that real estate property so you can take advantage of the closing costs, the points you pay on the mortgage and different things like that. So there's a lot of different tax planning strategies you can utilize, and I'll actually be going over about 10 different tips, 10 different things you can do in order to get prepared for tax season and making sure you're taking advantage of all of these tax breaks and different things like that. And that's where people like me come in. This is why I learn this stuff day and night. This is why I work with clients all the time. So always, never a bad idea in most cases to work with an expert and to get some expert advice pretty much. I'm always very flexible to talk to clients, anybody that needs help with anything like that. I also do workshops. Of course, I have my personal website, jeffbadu.com, jeffbadu.com. You can always email me. You can contact me pretty much, and I'm sure I'll be able to respond to any messages. It will get pretty busy during tax season, of course. I will have some assistants. I have a virtual receptionist, a virtual assistant to help me out. So if you do give me a call during tax season, you might get to my receptionist. But I'm sure they would be able to redirect the call back to me ultimately. But that's really as far as tax reform. I mean, it's a big topic. It is what keeps me up at night nowadays. This is something I always have to pay attention to. And until the new bill actually gets passed and actually is in statutory and it's law and things like that, until then, we still do have to use the current tax strategies that are available to us. So really, that's really it for the presentation. I definitely thank everyone for tuning in to WJC 98.3 FM, your voice, your music, your station. Shout out to Black Jesus.
I'm still here.
That's the man. Shout out to Mr. NK, and be sure to come out November 19th at the Stan Mansion. Yep, definitely get your tickets. WJC 98.3 FM. Make sure you bring your money, your fat wallets. Come and contribute, donate, tax deductible. This is one of the tax strategies that you can utilize, is that you can pour in your tax donations, or you can pour in your donations to this organization in order to continuously deliver content into the community. So once again, thank you all for tuning in to WJC 98.3 FM. My name is Jeff Badu, and I look forward to continuously delivering you all some content.